Most people right now are looking at the market and thinking, wait, didn't everything just crash? So why are stocks, crypto, and tech suddenly going up again? Because if you actually look closely, the S&P 500 and the Nasdaq have quietly bounced back. Bitcoin has surged again, and suddenly it feels like we're back in a bullish environment. But here's the truth that most people are missing. This is not a everything is fixed rally. This is a reaction, a temporary relief. And if you don't understand what's really driving it, you're going to get caught on the wrong side of the trade. Right now, markets are moving up mainly because fear has slightly reduced, not because problems are solved. Global tensions haven't disappeared, oil prices are still unstable, inflation isn't fully under control, and central banks are still being cautious. But investors? They're already pricing in a better future. That's how markets work. They don't wait for good news. They move on expectations. And when people believe the worst-case scenario won't happen, money starts flowing back in fast. On top of that, there's one massive force pushing everything higher: AI. We are currently living through one of the biggest technological shifts in history. Companies are investing billions into artificial intelligence, automation, and infrastructure. And whenever something this big happens, markets don't move slowly. They explode in phases. That's why every dip recently is getting bought aggressively. Smart money isn't waiting. They're positioning early. But here's where it gets interesting, and a bit dangerous. Because while everything looks bullish on the surface, the foundation is still shaky. Oil prices are high, global conflicts are unresolved, and inflation can easily spike again. And if that happens, markets can drop just as fast as they went up. This is why what we're seeing right now is not a stable uptrend. It's a fragile rally driven by optimism. So the real question is, what should you do? Most beginners make one big mistake. They either go all in because of FOMO, or they sit on the sidelines waiting for a perfect crash that may never come. And both strategies are wrong. The smartest move right now is simple but powerful: consistency. Instead of trying to predict the market, you slowly build your position over time. This strategy is called dollar cost averaging. It removes emotion, reduces risk, and keeps you in the game no matter what happens next. Because here's something most people don't realize. Markets go up over time. Not every week, not every month, but over years, they trend higher. And the people who win are not the ones who time the market perfectly. They're the ones who stay in the market long enough. Now let's zoom out even further. There's a much bigger shift happening right now that almost nobody is talking about seriously. The rise of AI is not just about better apps or smarter tools. It's about completely reshaping how the economy works. Some of the smartest people in the world are already saying that millions of jobs could be replaced. Governments are even discussing ideas like universal basic income to support people in the future. Think about that for a second. A world where a large percentage of people depend on monthly checks, while a smaller group owns the technology generating all the wealth. That creates two types of people: consumers and owners. And the difference between them is simple: preparation. If you ignore what's happening, you'll eventually be forced to adapt. But if you prepare early, you can position yourself on the winning side. That means learning, investing, and building assets that grow with this new economy. So instead of reacting to every headline, focus on what actually matters. There are only a few key things that truly move markets: global conflicts, oil prices, inflation, interest rates, and technological innovation. Everything else is just noise. If you train yourself to focus only on these, you'll automatically make better decisions than 90% of people. Now let's talk opportunity. The biggest gains don't come from following trends late. They come from spotting narratives early, before the majority even realizes what's happening. Every major cycle has these moments. Whether it's tech stocks, crypto, or AI, the pattern is always the same. First, nobody believes it. Then, smart money accumulates. Then, retail investors rush in at the top. Your goal is to be early, not late. And right now, we're in that early to mid phase where things are still uncertain. This is where positioning matters the most. So the strategy is simple. build exposure to strong assets, keep some cash ready for opportunities, and stay patient. Don't chase hype, don't panic sell, and don't overcomplicate things. Because at the end of the day, wealth isn't built in moments of excitement. It's built in moments of uncertainty, when most people are confused, distracted, or doing nothing. And if you can stay focused during this phase, you'll be ahead when the next big move happens.